All right, so let's kick this off. I have a lot of content to go through, and I know everybody hates slides, but there's so much data to present, there's really no way to do it without slides and having 10 or 11 slides. So the printouts was trying to help you in terms of all the information. So again, go to cdnpricing.com. cdnlist.com will give you a list of all the CDN vendors in the market. It'll also give you telcos and carriers that have done CDN either internally or externally, on net and also commercial services. And if you scroll all the way to the bottom of cdnlist.com, you can see a history of every CDN that's been in the market and what happened to them. So if you really want to learn about the CDN market, you can go back 21 years to guys like Sandpiper and others and see a list of every single one, who they got acquired by, although you'll notice probably 50% of them simply say they went out of business and when they went out of business. And then contentdeliveryblog.com, that'll take you to all the posts on my blog just about content delivery. Probably about 50% of everything I write about is infrastructure related. So if you want to skip all the stuff about Netflix and OTT, just go to contentdeliveryblog.com. So let's start with some latest market trends. Commodity CDN pricing is pretty stable. And the term stable is relative. The Wall Street industry many years ago started putting out things like stable in their reports about CDN pricing. So one of the reasons I started publishing it was because there were no numbers associated with what was stable or what wasn't. So pricing was down about 25% year over year in 2014. 2015, last year, was down about 20%. But for the largest customers, the big boys, it was down about 45%. The pricing I'm giving out today is for your average customer. It's not for Apple. It's not for Microsoft. It's not for Valve. It's not for some of the really big do-it-yourself customers, of which I have a slide that lists who those are. So this is pricing for customers who are not the top, let's say, 10 or 12 largest in the industry. The lowest price point I've seen is 0.0025, so a little less than 0.3 of a fraction of a penny. To give you an idea of just how low that is, well, it can't go much lower before it's zero. So some of the pricing that's out there now for the really large customers is just, it doesn't make sense. And I'll talk about that later in terms of who's giving out that pricing and why some others aren't. Customers are seeing good volume growth, but there's no major catalyst. So as I said in one of my earlier presentations, I get asked all the time, what's the catalyst to make this industry pop? There isn't anything. And again, that's a good thing. So we're seeing good growth. We're seeing steady growth in most cases, although some vendors have struggled. But for the most part, the volume that we're seeing for consuming video obviously grows, as we know. We've heard a lot of examples today about kids and tablets and phones, but keep in mind, a lot of the major growth of OTT is coming from customers who do delivery themselves. When Netflix continues to grow the rate they are, that doesn't impact CDNs. CDNs aren't delivering their video. So you have to look at the services in the market that are growing and the rate they're growing at that's actually being delivered by the CDNs. That's most important. Sling TV, PlayStation View, those services are great, but they're overrated in terms of providing any real significant uptick to CDNs in terms of volume or in terms of price, because they just, volume or in terms of revenue, because they just don't have a lot of customers. Sling TV and Sony won't say how many subscribers they have, but from everything we've seen in the market, it's less than 1 million subs per service. Sling TV is rumored to have about 500,000. 500,000 subscribers consuming video is not going to impact a major CDN. Software and large object downloads, that's a big thing. So when we say the term CDN in the industry, it doesn't just mean video. So if you hear some of the earnings calls from some of the public guys like Akamai, they'll say, hey, what drove our CDN business this quarter was software downloads. So software downloads, gaming downloads, it's a big business. The size of these files are really, really large. If you're here tomorrow for the Streaming East show, we have the streaming device pavilion set up, where we have 7 or 8 TVs set up with every single device on the market and every single OTT platform available. And you'll see the downloads on something like the Xbox or PS4, a lot of those can be 30, 40, 60 gigs just for games, for one game. So downloads is really big. DIY, do-it-yourself CDN. It can only be done by a few who have the largest traffic, and I have a whole slide on that I'm going to talk about. Impact of mobile is not a major driver for growth in video right now, so people probably look at me and say you're crazy because everything's done on mobile. But you have to remember, the moment you're delivering video to a mobile device, it's typically at 1/5 the size from a bit standpoint of what you're delivering to a computer or a TV. 1/5 the size. So how do you make up for that? Economics of scale. The other issue we have with mobile, obviously, is our data caps. So we've seen some carriers roll out things that allow us to consume more video, which is nice, but again, the resolution, the kilobits per second it's been encoded at is much, much smaller. So mobile is really only going to help drive the growth of this industry over time, slow and steady. Again, no real catalyst. 4K and VR, don't even think about them. If you're tracking the CDN market, they're going to have no impact over the next couple years. If Apple comes out with a subscription service, the growth to CDNs will be limited. I'll talk about that on another slide. There's a lot of small vendors in this space that are focusing on what the industry calls value-add services. So remember that CDN is not just about large object, small object, and software downloads. You know, you have dynamic content delivery, you have services for mobile content acceleration, you have security, you have front-end optimization, you have all these other services in the market, and you have a lot of small vendors who are out there targeting just those value-add services. That's good for the industry. Not everyone has to offer an end-to-end ecosystem. It's great that we heard Level 3 and Comcast are doing that, but remember they're also targeting broadcast and media entertainment specifically. So you have to look at the solution set based on the customer you're going after from a vertical standpoint, a use case standpoint, and a size standpoint. Delivering video isn't very profitable unless you own the network. So there are some vendors in the market who have a competitive advantage. Obviously, somebody like Level 3, as we heard, they own the backbone. Somebody like Comcast owns the last mile. But unless you have an advantage like that, it's very difficult to be in the CDN business and make money if CDN is your only service. Video takes up the largest percentage of traffic on a CDN's network, but it contributes the least amount of profitable revenue. That doesn't sound good from a business standpoint. However, some of them might try and use it as a loss leader to try and get other business. Or it's a checkbox because to get the really high value, high margin value add services, you also have to be able to do CDN. Vendors have gotten extremely focused, as I've mentioned. That's a good thing in the market. Focus has been key for vendors over, let's say, the last 5 years. Before that, we had vendors all over the map trying to be everything to everybody. They'd have a media entertainment service, and then next month they were also selling to enterprise. You really can't do both. So focus is a good thing. We've heard a lot today about QoE, measuring the quality of what we're delivering. CDNs are finally starting to focus on that, which is a good thing. For really 20 years as an industry, we've been walking around using the term video. Oh, that video is high quality, or that video is delivered with good quality, or that video is HD. What does that mean? Define quality. What's the methodology? There is no standard on the web for what HD even means. So I see some people say their video is HD, and then I see someone say it's HQ. What is HQ? High quality. Is that different from high definition? I don't know. There's no standard. So the broadcast standards we have in the broadcast world, they don't apply online with video. Multi-CDN strategy is growing, even for smaller customers, which is really interesting. I have a whole slide on that. I'm not going to go through this too much. 4K and OTT, as I talked about before, 4K is not a big deal. The amount of content that's available in 4K today is so small and so limited. Even guys like Amazon and Netflix have said that their catalog is going to be limited for years to come. It's not a big impact to the CDNs. Netflix streaming for 4K right now is 15.6 megs. They're hoping to save about 20 to 25% with HEVC over the next 18 to 20 months. Even still, you're looking at a 12 to 13 meg stream for 4K. And then you have all the issues with the hardware. You have the data caps. We have so many problems with 4K. The issue with 4K, though, keep in mind, is not technology. It's business. Because are you, as a consumer, willing to pay for 4K streaming when you can't notice the difference quality on a TV that's lower than 55 to 60 inches in size? Probably not. 4K doesn't help us on tablets, doesn't help us on phones, doesn't help us on computers. So consumers are going to determine whether or not they're willing to pay extra money for 4K. Even Netflix charges you, what, $1 extra, I think it is, for that package if you want it 4K, or more than $1 now. A couple bucks now. So 4K is not a big deal. And don't even think about VR, because that's even past 4K in terms of the impact and how many years it's going to take. As I mentioned before, the biggest growth in OTT is coming from companies who do most of their own delivery. It's not going over CDNs. So I realize all the CDNs are interested, and they say they're excited about OTT. Well, we're all excited about OTT, and yet even the CDNs who are excited about it either saw their revenues decline year over year or they grew 1% or 2%. So OTT alone is not enough to drive this industry to double-digit, let's say 15% year-over-year growth, or certainly 20+% like we used to see many years ago for some of the CDNs. I'm going to talk about Amazon's new program, actually, with one of the first questions I have, so I'm going to skip that now. I'm going to talk about how Amazon is going to sort of change the market for how content is distributed because they're becoming an aggregator, but I'll talk about that a little bit later. Latest on do-it-yourself. These are non-commercial CDNs. So the biggest question I get asked is, who's the next company or the next couple of companies who are currently using a commercial CDN to take their business in-house? So for all the Wall Street money managers in the room who obviously track Akamai, Limelight, Level 3, everyone else, over the last year, those companies have talked about how their largest customers, they don't name them, but it's Apple, Facebook, Google, Microsoft, have brought more traffic in-house. So as a result, they've lost a good chunk of revenue. So they keep asking, who's the next one? Is it NFL? Is it Major League Baseball? So the guys who do it right now, Amazon, Facebook, Microsoft, Pandora, Twitch, Valve, Apple, Google, Netflix, Sky is regional because they're just in one region of the world, Twitter, they either deliver 100% of their content or they deliver a large portion of it, the majority of it. There's nobody waiting in the wings. And the reason for that is it doesn't make sense from a CapEx and OpEx standpoint to bring delivery in-house unless you're the size of one of these companies. Because the return on investment that you're getting and the trade-off in terms of performance, you're not getting the most out of your dollars. Your dollars can be best spent somewhere else. The one that you would add to this, though, that's going to be pulling more in-house is AIV, Amazon Instant Video. They currently use third-party CDNs for a portion of their content, not all of it. When those contracts expire, that content will be coming in-house. So I have Amazon listed on here, but some of these use multi-vendors. Netflix and Pandora, 100% in-house. By my estimate, Apple's now taken 75% of all their traffic in-house by volume. They've done a really good job over the last 2.5 years of building out a CDN. And they did it primarily because they want to control everything in the ecosystem. So think of your iPhone. They control the hardware, the OS, the store, the browser. The one thing they weren't controlling was the quality of delivery to that device. So Apple brought a lot of it in-house. You're always going to have some companies like an Apple, a Facebook, a Twitter, who are going to still use third-party CDNs for a portion of their delivery, because in certain regions of the world, it just doesn't make sense for them to build out there. Or they'll use them for overflow. So that's one of the things Apple does right now. Apple, for the latest software update to the phone, Apple pushed out most of those updates across their internal CDN. But then in February, when they had that update, they pushed out for like a month a bunch of overflow traffic to CDNs who got a huge rush of business. And then in March, the business disappeared. So that's the way guys like Apple and others do things, but the vast majority of the content they're delivering is now in-house. Also remember that it's not hard for these guys to build a CDN, and it's not difficult, and it's not costly. So some of the CDNs in the market will say, customers try and do DIY themselves, but then they realize it's complex or it's complicated or it's costly, and they come back to us. That's not the case at all. Because remember, we're talking about a purpose-built CDN, and this is a really important term to understand. When any third-party commercial CDN goes out to the market, they have to support every platform. They have to support every protocol. We are condensing to HLS, which is good. We saw Jack from Level 3 talking about how things like RTSP, RTMP, RTMPE, all those proprietary protocols are disappearing. But as a CDN, you still have to support live, on-demand, small object delivery, software downloads, video. If you're Netflix, you have to support one thing, video on demand of your own content. That's it. So it's much, much easier and less costly to build out a CDN when it's just for your specific content, like Apple. They only support HLS. That's all they have to do. So it's not as difficult as some of the CDNs make it out to be when you're the size of these guys. As I mentioned, Amazon is bringing more AIV traffic in-house. That'll have the biggest impact to Akamai over the next 4 quarters. I estimate that business is $20 to $25 million in total in 2016 with Akamai. So it's substantial, but considering Akamai is over a $2 billion company, it's not that big of an impact. Everyone says, what about Disney, Major League Baseball, Advanced Media? Those guys are growing. They have so many customers. Again, it doesn't make sense for them to bring video in-house. They're just not large enough. To give you an idea, like Hulu. Hulu just announced that they have, 12 million paying subscribers, I think it was. So I checked in Q4, Hulu accounted for 2.6% of downstream traffic. So even they're not large enough to have their own CDN. Just doesn't make sense. So there's not a lot of customers waiting in the wings who are looking to build their own CDN specific to video. Multi-CDN growth, this was something that Cdxis shared with me. So I've been really surprised over the last 12 months just how many smaller customers, what I'll call tier 2 customers, have moved to a multi-CDN strategy. So multi-CDN strategy is where a customer decides to use 2 or more CDNs and they split their traffic across them. And typically, industry-wide, we saw that for only the largest customers. You're spending easily $1 million more a year, at least $1 million, on CDN services. You think about a multi-CDN approach. I'm now seeing customers who are spending $200,000 or $250,000 a year in total using 2 or 3 CDNs. So I asked Cdxis to look this up since they track CDNs, multi-CDN. And they saw here that over the last 12 months, let's see, what's the number here? I can't even see it. So total, I didn't add it up. Total, it's about 26% of their customer base is using multi-CDN. That's pretty high, especially being that these are tier 2 size customers. So multi-CDN is definitely something that's been happening more and more late, which really surprised me, to be honest. And every time I do the survey each year, I see more customers selecting more than one CDN as far as who they're choosing. So what's the impact? Why do you care? If you're a customer, the impact is easy. It shows you that there's many right ways to deliver content with good performance. There's not only one network topology that works, or you have to be doing it this way or using this type of technology. Customers realize that multiple CDNs have very similar levels of performance and different price points and different SLAs. And so it makes sense that you would use more than one CDN. For other customers, it doesn't make sense because you don't want to get raw logs from 2 different places. You don't want to have different types of metrics. You don't want to deal with 2 different types of contracts. If you use 2 different CDNs, you can't bundle all your bandwidth into one contract. So it's not a right or wrong answer if you use a multi-CDN. It's a matter of what you're comfortable with and what the purpose is of doing it. So let's spend a little bit of time on the competitive landscape. So I'm going to go through all the major players here. So Akamai. Akamai recently put out earnings, so we have an idea in terms of what they're doing as far as their CDN business goes. And they recently, just in the last quarter, resegmented out how they break out their revenue. But basically, Wall Street expects Akamai's year-over-year pricing to be, year-over-year revenue growth specific to CDN to be down anywhere between 3 and 6%. So you got some guys who are doing a little bit lower, some guys who say it'll be impacted more. But year over year, you're looking at anywhere between 3 to 6% projected decline in revenue. Amazon is still growing really fast in the market. Far too many people underestimate Amazon. A lot of people didn't think Amazon was as big in the market as they were, and Amazon wasn't breaking out AWS revenue separately when they did earnings. Well, in the last couple quarters, they have. So last year, AWS as a whole did $7 billion. This year, they're on track to do at least 10. Many on Wall Street project they'll do 12 billion. So Amazon is growing really, really fast. My next slide, I'm going to break out revenue per CDN, but Amazon is growing extremely fast. They're also adding more value-added services to their portfolio. So they already talked about coming out with a security service, and a couple years ago they added dynamic content delivery. So they're not happy just to continue to do commodity services. It's also one of the reasons they purchased Elemental Technologies, which I'll talk about later as well. So Comcast, you heard a lot from Barry during the keynote. Comcast is interesting because they can go out to a customer and say, I can guarantee you a level of difference in quality and prove it to you and show it to you that no other CDN can offer because I'm the last mile. That's a pretty compelling offering. So I started tracing some of Comcast's content last night. Comcast has Major League Baseball, Advanced Media. They didn't talk about it because they can't, but I can. It's public. Go and trace stuff from the NHL. HBO, they already have HBO for part of their traffic. You can trace that and see it as well. So they're starting to sign up some really big customers, and the approach is go to a content owner and say, look, 30% of all the traffic you're sending over a CDN is coming to my subs anyway. So just give it to me. I'll give you a 20% pricing discount. I'll guarantee you a level of quality that the CDN can't. What do you have to lose? I mean, that's a pretty compelling offering. So I'm going to talk Comcast projected CDN revenue, my estimate, on the next slide. But Comcast really has their act together in terms of what they're offering in the market, an end-to-end ecosystem, and they're new in the market. So a lot of people still don't know about them, but a lot of big, large content owners do. And they're doing a lot of testing right now in the market as well. Google Cloud. So Google announced an alpha version of their cloud product, their CDN product, a couple months ago. Just last month, they announced it's now in beta. So it's too early to talk the impact Google is going to have. They actually wanted to come to the show today and talk about what they were going to do, but it was a little early because they literally just announced beta a week ago or 2 weeks ago. But it's Google, so you have to be concerned they're going to just, like Amazon, try and push pricing down in the market. It'll probably start off with a very commoditized, vanilla-flavored CDN platform, but they'll add a lot of functionality to it over time like Amazon did. So Google will be a new entrant into the market at some point with a legitimate CDN platform and service with a real SLA. It's just a matter of time. Level 3, I'm going to talk about revenue in the next slide. They have the advantage, obviously, of owning the backbone, which has helped them be have a much more profitable CDN business. Also, their security business is really ramping up. Security business is going to be a $100 million a year business for them this year. So I put the security side in there because I wanted you to see that a lot of the CDNs have been diversifying revenue away from just pure CDN and moving into what we call value-add services for many years. But now some of these services are really starting to add up in terms of substantial revenue. To me, $100 million, it's substantial. It's still a very small portion of Level 3's total revenue, but it's still a good amount considering the product only launched a little over 2 years ago. Limelight's invested a lot in their network in terms of quality over the last, let's say, 18 months in particular. They've been signing up a lot more larger customers or getting additional traffic from customers, large customers they already had, but it's at a very low price point. So Limelight's been very public in their earnings calls that it's impacting their margins for a couple quarters, but they hope to make up for that over time with volume growth, blending that cost of traffic throughout the course of the year. Whether or not it'll work, too early to know. We have to see how much traffic they can really get from some of these large customers. But they're trying to get to the point of where they're profitable. They've been working on profitability for a long time. So Limelight's one to watch in terms of how much traffic they can get, how quickly they can put it on their network, how quickly they can lower their cost so that they improve their margins. Verizon, I still see them in all the major RFPs, so they're still around. They're the old EdgeCast, which is now VDMS, Verizon Digital Media Services. They made another acquisition, which I'll talk about in the bottom here. They continue to invest and build out their platform. I'm going to give out my projected revenue for them on the next slide. Fastly is probably new to some people in the room because they haven't focused much on video lately. They're making a big push into video this year. Most of the revenue has come from the value-add service of dynamic content delivery. It hasn't been video related. They do have some large video customers, and they're definitely going to make a push this year into it. Fastly's annoying Akamai a lot. I've seen emails where Akamai is sending to Fastly customers saying, we notice you use Fastly. If you agree to come to us, we'll give you a couple months of service for free. So anytime you see one CDN doing that to another, they're basically annoying them. I'm going to talk about revenue because they're going to be at over $100 million this year based on their run rate. And the last competitor to talk about is IBM. So IBM's one I haven't blogged about much, but I need to. I need to sort of tell the IBM story. IBM is going to be a major player in this space. They've made so many acquisitions and pieced them together, and they just recently acquired Ustream, which was a CDN, different type of CDN, but it's still a CDN. IBM announced a whole bunch of new customers at NAB just recently, last month. So IBM is a nice story to tell once they finish making the integrations. They're going to have an end-to-end platform like others. And that takes me to the platform. CDN is now a checkbox. So think of what's happened in the market. For years you had CDN saying, we can help you deliver bits. We can help you deliver better quality video. Well, delivery is not the hard part anymore. You talk to content owners, the next 2 days at Streaming East here, the content owners on stage aren't talking about delivery. They're talking about how do I ingest, transcode, store, manage, monetize, protect, business rules, track, analyze, business analytics, all that stuff in the middle of the ecosystem. That's the complex stuff. Well, the CDNs have realized that. So they've gone out in the market and made acquisitions to try and make an end-to-end ecosystem. So let's see if I can remember all these. You got Amazon recently acquired Elemental in November, $296 million. Level 3 acquired Servcast, long time ago. Comcast acquired the platform. Verizon acquired Edgecast, Uplink, and Volacom. Limelight acquired Delve. Verizon, Comcast. IBM acquired Ustream and Clearleap. So that gives you an idea. Almost all the major CDNs in the market are acquiring companies to get that broadcast ecosystem. And a lot of them are doing it for live linear. So services like a Sling TV that are broadcasting live, linear, that's a platform as well. So this is the future of CDN. It's an ecosystem. You're always going to have some CDN customers who say, look, I don't care about your ecosystem. I do it myself. I transcode my own videos. All I want you to do is deliver content with great quality at a great price. We're always going to have that in the market. But most of the major mid-tier, tier 2 broadcasters, Fox, Disney, Viacom, all these guys, delivery is not the hard part for them. They don't have that much traffic either. You'd be surprised. It's not as big as you think. The hard part is take one video, transcode it 20 different ways for every device you have to deliver it to, multiply that times 50,000 videos. Just management of that alone is insane. And then if you're talking about HEVC coming down the line, depends on whose stuff you look at in the market. Encoding from H.264 to H.265 today takes about, on average, 7 times longer. Now again, multiply that times 50,000 clips. So the problem is not pushing the bits out. It's all the stuff you have to do just to get the bits ready for delivery. So that's where CDN is headed. Cdn Vendor Revenue. So I know a lot of you guys can't read this in the room, although hopefully you can see from your deck. I broke out vendor revenue from the major CDNs over the last 4 years, along with either company projections for this year or my projections. So I made it very clear which ones are my projections versus which ones come from the company. Last year I stood on stage here and I said CDN service providers will generate $4 billion in revenue for last year. I was off. They generated $3.15 billion. So you might ask, how is my number off by, 30%? Well, many of these CDNs didn't make their numbers. The numbers they gave as projections, they didn't meet. So, Akamai's business is down year over year. Limelight was down 1%. Level 3 was up 4%, but they had projected over 20%. So a lot of the CDNs just did not grow the traffic the way they thought. So I condensed all of this to, and you'll see the notes on the bottom, this revenue does not include things like transit or colocation or value-add services or security. It's specific to broadcast revenue and software delivery. So here's my estimates for 2016. If you add them all up, you're looking at $3.61 billion. So year over year, it's 14% growth. And this is, again, commercial CDNs. So this isn't telcos and carriers who built a CDN internally and do it themselves. Think of Orange, BT, Telefonica, some of these other carriers. They're not selling it as a commercial CDN in most cases. So this does not include LCDN and MCDN. Licensed and managed CDN, this doesn't include it. This doesn't include transparent caching. This includes just revenue from Verizon, Level 3, Limelight, the major players. And then in the bottom, I grouped the smaller players together. CD Networks, Max CDN, Mirror Image, those guys combined, what their revenue is. So we have major CDN players, and then we have what we call regional CDN players. So a good example of a regional player might be someone like China Cash. Most of China Cash's business is in China. It's sort of where they specialize in. CD Networks is in Asia. Tata Communications, that's one region of the world. So if you add all of this up, it's 14% year-over-year growth. The the $4 billion number I gave out, it was just too aggressive. The CDNs just grew at a slower pace than even they were anticipating. Question on the numbers I know I'm going to get asked. Verizon, Level 3, Limelight, Fastly, Akamai. So Akamai is public, but it's a Wall Street estimate for this year. Fastly is my estimate in terms of their total breakout. They did $60 million last year. They're on a run rate to do $100 million or more this year. So what percentage of that is specific to media and software downloads? I'm projecting 18 million of that. Limelight breaks out their revenue. Level 3, this is a company estimate that Level 3 gave me to use publicly. So while they didn't break this out in their latest earnings call, that is a public number. Verizon is my estimate based on how they grew. If you look in the slide here, Verizon did 130 to 190. I predict they'll do 220 total. Akamai, so Amazon is the number I'm going to get a lot of questions about. So if you look at the slide here, I put my number down for last year for Amazon to 1.5 billion. So how do I come up with that number? So that is revenue specific to CloudFront, not all these other services AWS offers. So why is it so high? Well, 3 years ago, Amazon put out a public number saying they had 20,000 paying monthly customers just to CloudFront. If you look at the growth of how much Amazon has gone from 4 to 7 to 10 billion or 12 billion this year projected, use that rate of growth to estimate how many CloudFront customers they have. So let's put that number at 40,000 CloudFront customers. Now, some customers are paying $100, some are paying $1 million a month. Use an average of just $3,000 a month, that's $1.4 billion in revenue. Amazon's doing a lot more revenue than most people realize. Now, I think people are getting the picture with Amazon because now that they're putting out AWS revenue as a whole, and people see it growing from 7 billion to 10 or 12 billion this year, they're like, damn, this is really growing, this business. So now this number doesn't look so bad to them. Keep in mind, all of these numbers you see on the screen include storage, because none of the CDNs break out storage separate from delivery. So some of these numbers are high because there's a large percentage of this revenue that I'm putting here which actually comes from storage, but we don't know what percentage, and none of the CDNs will talk about it. There's no revenue in here for Google because it's just going to be too early this year. I'm predicting that Comcast is going to do $25 million this year in CDN business. Again, that's my estimate. China Cash is, their overall number is public, but that's my estimate. Also, China Cash's overall revenue was down year over year. That's another CDN that didn't grow. High Winds, that's my estimate. IBM is my estimate as well. And then all the other regional guys. So let's go right into pricing. Pricing on average was down about 20%. I expect again this year it's going to be down year over year about 20% for average customer. Don't think of this pricing if you're thinking of Apple or Microsoft or any of those guys. That's not average pricing. So this is average pricing. You'll see how I break it down based on defining what average is. I don't see any major pricing decline coming. Mobile's not being a huge driver because of bits. Video's growing, but a small percentage of video customers make up the largest percent of traffic on a network. So that's also something that sometimes dings CDNs for a quarter or a couple quarters. They have to reprice 3 or 4 really large customers in one quarter, and those 3 or 4 customers might be 40% of the traffic of video in their network. That impacts their margins. So for this pricing survey in March and April, there was just over 816 qualified surveys. I asked them everything like, who do they use? What do they buy? What do they pay? What's their traffic growth year over year? What do they expect pricing declines to be? What are some of the things they wish their CDNs did that were better? I asked them about reporting and analytics as well. I asked whether they pay on a per gig delivered model or per meg sustained. So it's about 20 questions, and then I break out the data based on size of customer, because you shouldn't look at pricing for a customer who's paying $100,000 a year versus a customer who's paying $100,000 a month. So I broke it out the same way I've done it in some of the previous years. Customers spending more than $1 million per year. Now this question was, I asked them, what were they thinking or expecting their traffic, let me start again. The question was, what do they expect their pricing to be down year over year? Well, on average, they said 34%. They're not being realistic. Their pricing's not going to fall 34%. I'm also asking the survey in the first half of the year where, yeah, they're making somewhat of a guess of what their traffic's going to be the rest of the year. But 34% is not realistic. Again, it'll be down 20 to 25% before we're at the end of the year. They expect their traffic to grow 162% this year. If you saw last year, they said 164%. So pretty even in terms of traffic growth year over year. On pricing, I saw 0.5 of a penny on a low and 0.8 on a high. That was for 20 petabytes a month. Per meg sustained, I have pricing on that as well. If you look at the difference between 2015 and 2016, pricing is down just a little bit, 0.1 of a fraction of a penny, but you'll see it went from 10 petabytes to 20 petabytes. So traffic growth doubled, and they only saved 0.1 of a fraction of a penny in price year over year. So it goes back to economics of scale. You really have to push so much additional traffic to a CDN over a fairly short period of time, let's say a 12-month contract, to really see a big pricing difference. So that's for a $1 million a year customer. For 500K or more, they expect pricing down 29%, more realistic. They expect traffic to grow 85%. Last year they expected 83. For this, I saw pricing at 0.7 of a penny low, 1.2 high. Last year we saw a low of 8 cents. So again, very small difference in terms of price. Finally, before I get to questions, there's a lot of people in the market who call me an expert on CDN. They say, Dan knows everything about CDN, just call Dan, he knows it all. The only reason I know a lot about CDN is because people in this industry are way smarter than me. Okay, I'm not a CDN engineer. I'm not an engineer, let alone a CDN engineer. Yes, I've worked at CDNs in the past, but I don't build this stuff. But I get to talk to people who are building out the largest public and private networks in the world. And I appreciate all the information they share with me, for sharing all the data with me. They trust me. They know what I will share. They tell me what I can and can't share. Probably 90% of all the information I collect on the CDN market, I can never give out. Because these guys, these DIY customers and the CDNs themselves, they tell me this information, telling me I can't give it out, but they want me to have it on background because they want also verification on their end of what they're seeing in the market. So I take calls and emails every day from the largest CDN customers in the world that you can all think of, asking me what I'm seeing in pricing, what I'm seeing in trends, what I'm seeing in shift, who's getting good responses from customers in terms of quality or customer service, what am I seeing in terms of pricing on contracts and length of contracts. So I collect a lot of information. I talk to a lot of customers, not just at the show, but the surveys. A lot of customers send me their RFPs. A lot of CDN vendors, almost all of them, share with me internal costs, margins on this stuff many times as well. So I just wanted to say thank you. I appreciate everyone who shares information with me. If you ever want help with CDN pricing or choosing or selecting a vendor, it's something that I provide as a free service. Streammedia.com doesn't do consulting. Inform, educate, empower. That's our job. So if you ever have a question about pricing, whether it's CDN or other services, that phone number on our website, that's my cell phone number. I answer it 24 hours a day, 7 days a week. So that's a free service we provide. And if you're providing me with your pricing information at the same time, I'm not saying customer names of who I'm getting pricing information from. When I do the survey, I don't say who those 800 customers are. That all stays private. So if you have information you're willing to share, I'd love to get it. And also, if you'd like additional pricing information, I have it as well. I also said I was going to give out storage pricing, but I forgot to put it in my slides. So if you're looking for storage pricing, just see me afterwards. I do have one slide I can send you on that. So with that, let's go into questions. The links I already gave you here. If you want this actual presentation you're seeing today, go to cdnpricing.com. The deck that we handed out, this one's a little bit more updated. You'll notice the date on that one's about 4 days ago. So I made a few little tweaks to the data, but nothing to the numbers. The numbers have all stayed the same on market sizing and on pricing. I only changed a little bit of the competitive landscape. So with that, let's go to questions. I already have the first question in, which has been emailed to me. So the question, this is a good one, is what happens when guys like Amazon and Apple and others start becoming distributors in the market? How does that impact CDNs? So let's sort of tell a short little story here. For those of you who remember when CBS All Access came to the market, CBS said we're going to go to the market direct with an OTT service. We're going to charge $8-9 a month. We're going to hire a CDN to deliver it, or multiple CDNs. We're going to build this platform out, use vendors in the market, build our apps. They spend about 18 months to go to market and then start promoting to, I guess, people who just like CBS shows, which to me seems like a very small segment of the market overall. But they decided to go direct. And after that happened, we noticed a lot of CDN and others in the industry said this is the future. So they thought after that, okay, well now CBS will do it and Fox will do it. Everyone's going to start doing these OTT services. Well, nobody followed suit. You had Nickelodeon, with the noggin stuff. You had just sort of a few things here and there, but nothing major. And then what happened was Amazon came out with this program, this content provider program, where if you're someone like CBS and you want to launch an OTT service direct to consumers, you can do it now through Amazon's program, and they'll handle everything for you. They'll build the apps, ingestion, delivery. They have an end-to-end ecosystem, part of why they acquired Elemental also. And they've already signed up 30 content owners, including guys like Showtime, because content owners and broadcasters have realized Amazon already has our payment information. It already knows what we're watching. It knows how they can target specific shows of a specific type of content to a specific user. So there was this shift in the market to where all of a sudden aggregators are really the future of where these OTT services are going. Now, some say Apple will be next. It's possible, but until Apple gets their own service out in the market that we've been rumoring about for years, they have to do that first before they can start aggregating content for others. But guys like Google, Microsoft, Apple, Amazon, in the long run, they really control this. They're going to control how we consume OTT services because as a consumer, we don't want to have to go sign up for 10 different services with 10 different accounts at $6 a month. It just doesn't make sense. You might have that for, think of guys like Drama Fever that just got bought. Very specific targeting somebody. Think of Acorn TV. Very good with just drama shows. So we will have niches in the market. But for major entertainment content, we're going to have aggregators and guys like Amazon. So the first question I got here was, how does that change in the market affect CDNs? Because if I'm now, someone like a CBS and I go directly to Amazon to do this for me, that now means I'm not picking a CDN, or does it? That's the question. If you're going to Amazon and you're going in their program, they're delivering that content for you over CloudFront. So it does impact the CDNs because a lot of the growth the CDNs might see from major broadcasters might now be coming directly from aggregators who are doing that delivery themselves, be it Apple, be it Amazon, be it Google. So that's something to watch in the industry over the next, it's probably an 18 to 24 month period before we have a really good understanding of just how many broadcasters are going to go to someone like Amazon. But Amazon's now signed up a lot. They're signing up, more every single quarter. They're talking about it more publicly, who they've signed up. So we have to keep an eye on the aggregators because that could pull traffic from CDNs who right now are already, as a whole, struggling to get additional traffic from a lot of customers who've already pulled traffic in-house. So the last thing the CDNs want to see is another aggregator doing that. Did that answer your question, Michael, or you have a follow-up?
Well, just would that be, do you imagine that then that would be an option for the content providers to have the aggregator provide the CDN distribution, or could they?
Yeah, so the question is, what is the...
How would it work commercially?
What is the model to deliver content if you go to Amazon to be the distributor? Well, the model is right now, Amazon delivers that for you. It's CloudFront. Is there an option of where you could still use your own third-party CDN and put it in their service? There probably is. But I can't go into details on that either because I can't talk about it, or it's just too early because we just don't have enough people aggregating content through Amazon. And they've only just recently signed up some really large content owners. So it's also a little too early to know. But I would imagine that, Amazon, Apple, these guys love control. They all want control. So they're going to want to control as much of that delivery themselves because they want that experience to be good, because they want to make sure they're not being blamed for it, even if it's not their own content that isn't getting delivered with good QoS. All right, so we got time for a couple questions. I'm not going to hold people up, obviously, from cocktails. So who has questions on CDN, or I'll also take questions on if there's other things you heard at the show that you're really interested about, or something company talked about you want to know more about.
Yeah, so you said customers expected in 2015 growth of 83%. What eventually happened? Do you ask them if it was true? How far was it from their expectation?
No, I don't go back and say what did you expect versus what did you get. Just
But do you think each customer, if you think about it, their spending is growing every year, or it's actually shrinking because of the reduction of prices?
Yeah, that's a great question. So is CDN spend per customer growing because of their traffic growth, or is it actually shrinking because even as they grow traffic, pricing goes down? That depends on the customer. It also depends on what CDN the customer is using. So I see plenty of RFPs in the market where a customer was spending $1 million a year last year, but they were on a 3-year deal where pricing was 2 cents per gig delivered, and now they're getting half a penny. And even though their traffic has grown so much in 3 years, their pricing has fallen by 75%. So they're actually spending less. So it depends on the size of the customer and what they're committing to. Length of contract has a huge impact. One of the questions I asked is, what's the average length of contract for CDN? It's still 12 months. A couple years ago, it was 24. Sometimes it was 36. For those who are picking CDNs in the market, don't ever sign more than a 12-month contract. 99% of the time, it doesn't make sense. Why lock yourself into a price that you know is going to decline next year? If you have sliding scale in it, okay, that's good. But I still see a lot of contracts where customers are just paying way too much, or they don't understand what the going rate is for the pricing in the market. Or, in some cases, if I ask them why are you paying so much, they might come back and say, we're doing something really unique, or we're doing something different, and it warrants an additional cost. That's okay. Sometimes that actually happens. Not every CDN deal is the same, obviously. They're different in size and scale and performance, what you're guaranteeing, what the SLA says. So there are a lot of variables there. Other questions? Yes.
Dan, so the U.S. model of 5 big guys building do-it-yourself networks and having a large majority of the traffic, to what extent is that a leading indicator for the rest of the world where there might not be, say, the availability of dark fiber? In fact, dark fiber is either not available or spotty. I mean, does that same model replicate for the other 8 billion or so people with cell phones over the next 5 to 10 years?
Yeah, good question. So the question is, with the small handful of large content owners or distributors in the U.S. who are doing do-it-yourself CDN, that model of bringing traffic in-house, does that model also replicate outside the U.S.? It's not as easy outside the U.S. because of cost, one, but also a lot of those that we've seen, let's take Sky for an example. Sky only has to deliver content to their users, which are in one region of the world. So that also makes it a lot easier. If you think of Apple, Facebook, Twitter, Valve, these guys are truly global. So a lot of the regional CDNs where they have brought traffic in-house, they only have to deliver it to where their customers are. And if their customers are only in that particular region, look at China. There is plenty of content that's being delivered in China that nobody cares about outside of China. You could say the same in, we have that in Russia. Look at some of the small regional CDNs in Russia. So can you compare it to the US? I don't think you can, only because the size and volume of traffic is so much different, which obviously changes the price. At the same time, yes, there's not as much dark fiber, or the transit you have to buy is much more expensive. That impacts the price. And since it's economics of scale, you have higher price and higher costs, and you have less traffic, which makes it even higher to begin with. So I don't think we can compare the DIY in the US outside the US. It's just a very different market, and it's a very different size of what's being consumed and what the growth looks like. But we do have examples like Sky, where they've done a really good job. It hasn't cost them a lot. They've increased quality. And as a result, customers get a better experience. 1 or 2 more questions? No? Okay, so let me just wrap up with a few things then. We're about 10 minutes early, but that's fine, because we can start heading downstairs now. So again, these slides are at cdnpricing.com. If you're looking for pricing I didn't have on the sheet here of like customers who spend $100,000 a month or $250,000 a month, I have that. Just email me. Also, if you're a customer in the room who wants more information in terms of what other customers, maybe your size, said in the survey, I'm happy to share that data with you. It won't come with any customer information, but that way you can at least compare it. I'll stay up here to answer any questions. I'd like to thank everyone coming to the CDN Summit again. I know it's been a long day. Appreciate everyone making it to the end. If you have any additional follow-up questions afterwards, if you met somebody here and you lost their contact details, just email me. I do a lot of matchmaking after the event's over as well with people, and you'll get an email from us in about 2 weeks when all the videos are online, and you'll be able to see all those. And then finally, if you start going to contentdeliverysummit.com tomorrow, click on the agenda page. That's where I'll list all the PDF presentations that you saw today. I've already started putting some up there. So that's where all the archives will be starting tomorrow. So with that, let's go downstairs. Thank you very much for coming.